kaibigan! Welcome again sa ating episode ng In My Toolbox, your weekly talk show on your personal finance. Only here at PHLV Radio. The goal in this show is to give you financial information that you may be able to use on your day-to-day financial decisions. We will unbox topics that will hopefully aid you and guide you and maybe even add to your financial tools. We will tackle, of course, important informations mostly not taught in school, but is so much needed to empower you financially. As usual, mga kaibigan, in any idea that will transpire in this show, always consult with your financial advisors, insurance professionals, your tax consultants, etc., etc. My name again is Enrico Pobre. I'm your host. I'm a sales, marketing, and of course, a trainer, an economist, an entrepreneur, and a financial professional. Yan naman mga kaibigan. So if you have any questions, ask them away. Of course, on the chat box below. Or if you will be listening to this show on the later time, please feel free to connect with me through Facebook page In My Toolbox, or connect with me via Instagram or LinkedIn, or simply Google my name, Enrico Pobre. You won't miss me. Okay, so, or you can email me at enrico.inmytoolbox@gmail.com. Ayan naman mga kaibigan. Thank you so much again for being in the show today. Of course, this is going to be a very special episode of In My Toolbox because I have a guest tonight. Yan naman, di ba? So, of course, we'll be tackling about some financial tips. It's just what we do every day. We'll be tackling about it, and let's see how far we can go with this one. But of course, this will be very, very beautiful conversation. Having an awesome guest. I got to know her one of the events here in Las Vegas. Let me just introduce it to you. Let me just introduce her to you. She's actually a life insurance agent as well. So she does life and of course a health insurance as well. She focuses on Medicare mostly, but she's also a loan officer with Gold Star Financial Mortgage. Sige, tignan natin ha. Let's all welcome our good friend, Miss Milan Bui. Awesome. How are you, Milan?
I am good, Enrico, and thank you for introduction, and thank you for having me here today. It's really my pleasure.
Of course, I'm so excited, during those few days ago that we were talking about you guesting the show. Oh my God, I'm saying, this is going to be an awesome show, right? So, yes, Milan, so I'm just so excited that we're going to be talking about some financial tips, and I know you're also in the financial industry. Not only in the insurance side, you're also in the mortgage side, and I think there's something that we can both talk about, right? So mga kaibigan, we have Milan here, and I'm sure that, we can have a very good conversation today about some financial tips, Kasi, syempre, although we are making some resolutions to improve our financial situations, it's a good thing, di ba? But, we can do it at any time of the year. Because most people, Milan, they only do their financial resolutions when it's what? New Year.
New Year resolution.
Right? So, because many people find it easier. I'll restart, beginning of the year, of the new year. Well, regardless, of where or when you begin, the basics of financial, growth or financial improvement will remain the same. I think that's something that we're going to be talking about today, Milan, some of these things. But just before we move forward, Milan, tell me about tell us about, something about yourself.
Well, I've been in the financial industry for over 20 years. As the
20 years?
Over 20 years.
Yeah, you started when you were 5?
I started when I was really young. And I tell you the reason that I love being in the financial industry is when you're really working for yourself and at your own pace. And when you're starting a young family, you need that flexibility with time with your family and making money. Money always been part of your life. It's always had to be part of your life, especially starting a young family. So time management and management has to go hand in hand. So being in self-employed and working independently gives you that freedom of choice. how much time you need for family and how much time you needed to educate the clients in their financial planning. And that's what I've always been in this business, and I love money, and I love to coach clients about financial planning.
Well, I think I like both of what you said. I like money too.
Don't we all?
And then education our clients really is the
Yes.
first thing that we do. In fact,
Yes.
And money will follow.
Yes,
And
that's right.
Helping families out there, mga kaibigan, just like yourselves, we love helping people,
Yes.
especially on how to situate themselves correctly
Yes,
in
yes.
finance, right? So you said that you've been in the industry for about 20 years,
Yes. Mm-hmm.
So what's the best experience that you probably can ever think right now on your experience by helping people? What's the most memorable experience that you had in finance?
Back in the days where I started financial planning, death life insurance is something that is hard to talk about.
Wow.
It's hard to bring to a family, and they, especially the Asian family, and they think it's bad luck to talk about death.
Yeah.
There's no such thing as planning for your own death. But when you start, as the years go by, and they see that, health deteriorate, our health change, the way we live, our habits changed, right?
That's right.
And so as our health declined and accidents, things happen in the family. And I think the best experience that I've ever had was delivering a $500,000 life insurance check to a family when there's a loss of a husband. And I think that paid off of all the hard work that I had to educate and persuade families to believe in life insurance. And life insurance is not about, about covering your death. Is about leaving something behind financially for your loved ones.
Exactly. You said it so perfectly. In our industry, mga kaibigan, if you have not delivered any death benefit or death check yet, you're not a life insurance agent
Yes,
yet, right?
yes.
And because you will see a different perspective.
Yes.
Just bringing this check.
Yes, it pays off.
Yeah.
And actually, people really love you and appreciate that you've taught them, you've educated them into buying this life policy. And, and the business that I'm in is not about how much I can make off a policy. It's about what are the needs of the individual family. And to me, that's more important than anything.
I agree.
And money follows, because if you work with good ethics and honesty, it goes, the policy is money will follow you everywhere that you go, because there's a purpose and there's a why you do what you do.
Exactly.
And if you understand the why of you do what you do, money will follow, success will follow, and you know what, you can just sleep at night.
Yeah.
Right?
In fact, I remember my time too when I delivered a debt check. It's never enough.
Yes.
But at least there is something.
Yeah.
I always remember this one. When you do the right thing today, you are still protecting your family even though you're not around anymore.
Yes.
Because you just did the right thing. Wow, that's awesome. I like that. I also remember those times that I delivered that check. It's not that it's a good idea to do that. You hope that it's not going to happen, but of
No.
course,
But when it does happen, you want to be there in person. You want to give them that, that paid out, and it makes you feel so good.
I know.
And so proud of what you did, and you love your job even more.
Exactly, and I couldn't agree more, Milan. That's very good. So let's just give our audience tonight, Milan, about some financial tips that probably we've learned all this years that we've been doing business. You started 5, so
Thank you so much, Enrico. You're
20
sweet.
20 years ago. All right. So one of the tips that I know is to, number one, get paid what you're worth.
Yes.
And I actually like what you said a while ago. Being an independent,
Yes.
contractor, you run your own business, you have your own time. In fact, that's freedom of time.
Yes.
That's what everybody likes, would
Right.
want to have, but not everybody can afford to do that.
That's right. That's
right.
right.
So it says here, get paid what you're worth and spend less than you earn. I think that makes sense, right?
That makes
That's a
sense.
good tip for financial tip here for us. So it may sound so simple, but many people struggle with this.
Yes.
It's very, it's very simple to listen to.
Yeah.
Oh yeah, spend less than you earn, but it's very hard to do. So you make sure you know what your job is worth in the marketplace.
Mm-hmm.
If you're employed, you want to make sure that you're being paid correctly, of course, well, how do you know that? Of course, some peers will tell you how much is a nurse being paid, or how much is a doctor being paid, how much is a waiting staff being paid. You need to know, of course. But, of course, you have to know as well how much is you're earning. And secondly is, you have to spend less than what you earn so you can start
Which
saving.
is hard to do.
It is very hard to do. What can you say about that?
Well, I don't know. It's hard. We all know that theory, right? But what's hard is that what do you do when your income stays the same? And gas gone up double.
That's another story.
Or the housing interest rate rise double. What do you do? So the only thing you can do is cut back. Now, my tip on this is what you can do is to fall back on the financial aid that you kept when you had the money.
Exactly.
So it's called part of financial planning is when you save, when you commit to save that extra dollar that you made a certain month, a certain year ago, and when we fall into this hard time, at least you have a cushion to fall back on.
That's right. And you're so right. It's easy. It's easier said than done, right?
Yes.
So no matter how much, this is what I see it. No matter how much or how little you're being paid, you want to make sure that you spend less than what you earn. But this is the thing. It's gonna be hard to get ahead always.
Yes.
So well, it's easier to spend than to earn.
That's right.
You can spend $1 million in a day if you want to, right? So, but it's just the way how it should be. That you need to know how much you're earning, and you just need to know that you need to spend less than what you're earning.
Right. But I think the biggest tip on this is spend what you have.
Exactly.
Spend what you have. So if you have $1, spend $1. If the worst is you spend $1, but if you live. America's way of living is live off of your credit card. Now that's where you get yourself in trouble.
That's it.
Right? So it's okay if you have an extra dollar and you have to spend that extra dollar that you have. It's okay. It's okay. But if you get yourself into deeper debts, like by using your credit card for vacation or for your spending, that's where you get into a hole.
Exactly. And then sometimes people think that their credit card is their money.
Well, it's easy to spend on a credit card versus you getting the actual cash out of your purse and pay for things, right?
Yeah.
Mentally, it's different. Mentally, it's easier to spend on a credit card versus your own cash.
Exactly.
So keep that in mind.
Yeah, that's a good tip there. I actually like that, Milan. So stick to a budget. That's what he was saying. The second tip that we have today.
Have a budget and stick to a budget.
Stick to a budget. And of course, you have to have a budget. That's very good.
What you have,
So this is a very important step to consider when you're trying to get ahead financially. So it's just a matter of getting ahead. What does getting ahead means? What do you think about that?
I think getting ahead means that you go with the flow. What is getting ahead? Sometimes because of the economy, we will not get ahead of the economy.
It's very hard.
So getting ahead is just basically stay within your budget, know what to spend and not to spend, know when to cut back. Sometimes we have to cut back on our own used of way of spending.
Yeah.
Like cut back our pleasures, cut back on the things that we want, that we use monthly.
In a supermarket, 70% of the buyers inside a supermarket are all impulsive buyers.
Well, they said when you go grocery shopping, go with a full stomach.
Yeah, that's right.
And you don't buy all the stuff.
That's a good tip,
but
too.
But if you go to the grocery and you're hungry, everything is a need.
Exactly.
And you buy everything that
In fact, I was talking to a friend of mine the other day. Enrico, whenever I go to a supermarket, I'm always hungry, and I buy everything that I see.
It's true. It's really true.
That's actually very, very true.
And you end up buying things you don't really need.
Exactly, and it's out of the budget.
That's right.
So we have to stick to the budget, mga kaibigan, And of course, it's just like, well, I want to go to New York, driving to New York. If you don't have your GPS, you probably find yourself, traveling all over the place, right?
Right.
And that's not a good idea. The same thing to budgeting. If you have money, you would want to know where the money is going. It's the same thing. So how can you set a spending and saving goals if you don't know where your money is going? That's very important. So you have to, again, I like what you just said there. You have to have a budget, and you have to stick to the budget, by setting up a budget.
Yeah.
Whether you make 1,000 or hundreds of thousands of dollars a year.
You still have a budget.
The problem really is not the income. It's the
spending.
spending.
That's right.
So
That's
there's
right.
no income problem.
Your
It's-
income is there. It's
there.
stable. It's there every 2 weeks or every month.
Yeah.
It's your budget. It's the spending that costs you to go over
Exactly.
your money that you make.
And I couldn't agree more again, Milan. So pay off credit card debt. That's the
Yes,
third tip
when
that
you
we have
can.
here.
That's right.
So we were talking about that credit card a while ago, and a lot of people think that that's their money and they own it, right? And
Yeah,
they don't know
no.
they're killing it, especially for what? For interest rate.
24%.
Oh my God, that's
a
crazy.
year.
I remember I have a client, Milan, right? So I was saying, didn't you know that you're borrowing your own money? No, I'm not. No, yes, you are.
Yeah.
So, how much is your checking account? $5,000. How much do you owe your credit card?
10,000.
There you go. You
Right.
just borrowed
Yes,
it.
that's.
And then people would like to use credit card that they pay 24%
Yeah.
rather than use their own money that's earning 0.03.
Right, because they don't see it.
They don't
They
see
like
it,
the cushion, but yet they, the cushion, but they don't earn any interest on the cushion that they have, and they owe more than what their assets, and that's what gets them into trouble.
Exactly. The word really there is trouble.
Yeah.
That plastic is so convenient.
Yes, and if we don't know how to control our credit cards and our debts, you get yourself in a hole, and that's where you can't. It's hard to get out of debt.
The average family or a person right now has about 3 credit cards.
With 5,000 limits, that's $15,000 in debt.
Exactly. So,
and how many family actually have $15,000 in the bank to offset what you owe?
No,
not
everybody.
That's right. That's right.
So that's the reason why those little plastics. It's so convenient to use. It's so tempting to use.
The only plastic I really like is the debit card because
card.
you cannot go over your balance.
Exactly,
if
right?
you charge over your balance more than what you have, it declines. So I like the best thing is you use a debit
card.
Right. Yes.
I'll take note of that. It's so easy to forget that it's real money we're dealing with when we actually use them to pay for a purchase.
That's right.
Yeah. Well, whether it's large or small, it's credit card. You
That's
owe
right.
somebody.
That's right.
Well, even when we resolve this to pay the balance off quickly, the reality is that we often don't. Some people, I'm gonna pay this one anyway.
Right.
No, you won't.
Right, right.
Probably only 5% of the population does.
Or even
do
they
it.
pay it off and that they go right back. Oh, there's a zero balance and I have 5. They send you a statement every month saying your balance is 5,000 available credit. Well, you see, I have 5,000 to use.
Yeah.
But mentally, it's not 5,000 for you to use. It's 5,000 you will
spend.
owe.
You
will
spend,
spend and owe. Yes.
Exactly. Oh my God, this credit cards really, that's very scary, guys. When you don't know how to use these credit cards correctly.
Yes.
I'm not saying that credit cards are totally very bad, but then again, you just have to know how to use it correctly.
Well, credit
right?
cards are good if you know how to utilize it correctly. For example, if you don't have debts in America, you cannot establish credit score. And without a credit score, you cannot loan yourself
Exactly.
anything, right? You buy
Yeah.
a car, you buy a house, or you make an investment. We have to have some kind of established credit record.
Exactly.
Credit
Speaking
file.
about that, in what you do, Milan, I know you are also in mortgage. You're a
Yes.
loan officer. What are the challenges that we face with interest rates because it's so high? And how does that affect people's job or your job? For people, who buys and sells houses. So what can you say about that?
Of course, many people will see a big challenge in the interest rate. Buyers are not buying, and buyers are not competing in the seller's listing. Like we were several months ago, and so it is a challenge. Buyers are not buying, so we are not making that many loans, and sellers are not selling their house as fast as they wish or at the price that they wish because of the interest rate. Because of that, and because of we are a direct lender, we do have awesome program to offset to help buyers get into a home today at a discounted called temporary buy down.
How do you call that again?
Temporary buy down.
Temporary buy down. Mga
of
kaibigan,
interest
so
rate.
she was trying to tell us that using this temporary buy down,
Yes.
you can see an option on
Yes.
how to lessen this interest rate when
That's
you buy a
right.
house. Wow,
That's right.
tell us more about that.
Yes, it's called the 3-2-1 buy down, which is the most popular interest program right now. For example, if the buyer signs their contract, 30-year fix, it's not an ARM, it's not adjustable, it's 30-year fix. So say you sign your house today for 7%, right? So the first year's interest rate for the buyer will be 3% discounts called 3-2-1. So 3% meaning 4%
Charge,
rate
yeah.
first year. The second year goes up up to 5% interest rate. Then the third year goes up to 6%. Then the fourth year goes back up to the original sign rate of 7%. Now, during these 3 years, you're still paying for the interest, for the reduction of interest rate, right? But your mortgage is still 30-year fixed. Now, should the end of 3 years, the interest rate are lower than 7%, the buyers can always refi to get a lower rate. And or if interest rate goes up, then they're happy with their 7% interest that they sign.
Perfect. You
It's
know,
a
mga
win-win
kaibigan,
situation.
the temporary buy down is actually very beautiful. I like it.
is.
Guys, look at this. You know, we're looking for ways on how to save money.
Yes.
And then we can direct that money to something else that you can actually start building wealth as well.
The only there's a few requirements as to how you qualify for the buy down.
Okay.
Is that the seller has to pay for the buy down.
Oh, there you go.
Yeah.
If you're a buyer.
The buyers cannot pay for the buy down. Now,
Very good.
buyers can pay for the buy down themselves for the fixed 30 years, but it's very costly. And at this time, during
Yes,
this time,
definitely.
it's really difficult for the buyers to buy down. But this program is made for the seller to pay for the buy down. It is very reasonable, and it helps the buyer to come in to keep buying the house and not have to wait until the interest rate goes down.
Yeah.
And, you know, and we coach and we educate realtors. Instead of asking the seller to lower their listing price, we can go full price and ask the seller to help pay for the buy down for the buyers.
Wow.
So it's a win-win situation.
That's right.
For the seller
It's a
can make
win-win.
the seller can make the full price, the buyers can get the discounted rate, and we're all happy.
Exactly. I
Right?
actually like that. And that's one way to help people out there to overcome the problem for high interest rate, right?
That's right. That's right.
Wow. You know, especially now the market is just so erratic that we just don't know what's happening. And I like the temporary buy down, guys. You know, if that was so fast that she explained it, you know, if it probably there's what you call a 7%, for example,
Right.
and then the buy down is 3-2-1.
Right.
It means that on the 7% in the first year, you have a discounted rate of 3%.
That's right.
So the first year would be you'll be paying 4%.
That's right.
Now on the second year, 2 minus 7 is 5%
That's
instead of a 7.
Exactly.
And then on the third year is 1. It means that out of the 7 you take at 1, that's 6%.
Right.
You know what's so good about this temporary buy down is that what if interest rate will be higher because in the fourth year you'll go back to the 7%.
Yes, that's right.
So, but if it's higher after 3 years, well, you'll be happy because
Yes, right.
you're locked with a 7%.
30-year fix. You locked
Exactly,
for
that's
30 years.
30-year fix.
Right.
Or if it's actually going, if the interest rate is less than that,
Yeah.
the 7%, you can always refi.
Refi, that's
what
right.
a powerful!
You can't go wrong with that
You
program.
can't go wrong with that.
No, and I couldn't explain it better than you, Enrico. You did it just so perfectly. Thank you.
You know you're my friend, Milan. But that's very good, guys. So now, especially in the show, we always talk about where can we actually save money. You know, the 3-2-1 buy down, that saves them hundreds of dollars.
Now, I've had people asking me, why should I buy now and not having to wait maybe 1 year, 2 years down the line? Well, first of all, we don't know what the interest rate going to do next year or 2 years
Exactly.
down the line, right?
Yeah.
Now, when you buy down, and you buy down with this rate reduction program with 3-2-1 buy down, people forget that they can earn equity.
Yeah,
They
automatic.
earn equity from this moment when they buy, and 1 year down the line, 2 years, they earn equity. And it's tax write-off on their tax return, right? Versus rent. Rent are going up,
Yep.
and mortgage payments are now lesser than actual rent payment. So it
Wow.
is better for buyers to consider buying this year and not having to wait when the interest rate goes down.
I love it. You know, so that's the reason why buyers should still buy today.
Still buy. Yes.
You know, because a few months ago it was a buyer's market.
Yes,
And now you
now-
can say that it's still a
It's
buyer's market
Still-
because of the strategy
Right.
of temporary
Right.
buy down.
And and the good thing is you don't have many buyers fighting on this price competition, right? Where you bid 30, 50, 60,000 above sales price. You don't
Exactly.
have that now.
Wow.
Sellers are apt to working with the buyers more on making reduction on the price, asking for paying for the buyer's concession. So it's a win-win situation for both, really.
Exactly.
And I'm really excited about the program.
And that program is going to be helping people, especially we're going to go to our fourth tip here, which is contribute to a retirement plan.
Yes.
Now you have a house and you can save on this monthly mortgage.
Yes.
Now you can contribute more to
Tax
your retirement
write-off.
plan.
Yes, yes.
You know, and tax write-off as
Yes.
well. But on the retirement plan, guys, if you have 401k, well, start contributing to it.
And and I talk about 401k. 401k is usually mostly works best for people that are employed by employer.
Yes.
But there's many Asian, like nail techs, right? They don't get paid W-2. They get paid like 1099 at the end of the year. Well, they don't have any contribution, any 401k. So the best program, the best retirement for these nail techs or that don't have any retirement is a Roth IRA.
That's a good one too.
It's a good one.
Yeah.
Yes, that they let you contribute $5,000, I think $6,000, $6,500 per year.
Per year.
But it's tax free when you get it out. When you're 65 and you withdraw the interest out, it's tax free.
Exactly.
So but the thing is, I'm not so much into how much interest I can earn, but it's a one way where I can hide my money for rainy days, for retirement, to where I don't work as much, many hours, and my income reduce. At least I have the Roth IRA to fall back on.
Perfect. That's a contribution to retirement plan. So
Yes.
there's a lot of retirement plan there, guys.
Yeah.
So defined contribution, 401k.
Talk to your financial planner.
Exactly.
They can help you. Yes.
They will definitely help you
Yes.
in that. The Roth IRA, if
That's
you
right.
want to know more about that,
Yes.
go to your banker. Talk to them
I don't know
about
the
it.
banker, but yeah, financial planner will be your best bet.
Will be your best bet, right?
Yes.
So if you just like what you were saying there, the nail tax, usually the employers doesn't really offer a retirement plan.
No, they don't.
So they just have to do it, just for themselves. So IRAs, individual retirement accounts, are best bet for them, right? Just like what you said.
But I think the thing here, they nail techs they make good money. They work hard. They work
Yeah.
long hours. They work very, and they earn the money. It's a matter of they don't having the time, taking the time out to work and ask the question, work with a financial planner to find out what are my options to save money. But they can. It's just a matter of educating them.
Exactly.
Yeah.
Well, they're too busy. Well,
Yeah.
it's okay, guys. Disturb them for their own benefit.
Yeah, knock. I could teach you how to save money.
Yeah.
They make money, but not everybody knows how to save money for the rainy days. Yeah.
That's the other thing too. Some people knows how to make money,
Yeah.
but they just don't know how to save the money. It's not how much you earn; it's how much you keep.
Yeah.
So okay, so
Especially for retirement,
For
It's
retirement.
just something we don't talk about, or they don't think about retirement because they're still young and energetic and making so much money. But it's how much do you keep at the end?
at the end
how
of the
much do you
day,
keep at the end of the day?
again,
Yes.
we're gonna go back to what we were talking about a while ago. Milan, it's not it's not the income problem;
It's
it's
the
the
spending and the
spending problem.
savings. Yeah.
So can you imagine you're earning $5,000 a month, but you're spending $10,000 a month? I don't know where it's gonna come
Well,
from.
the LV purse, it costs $6,500, or the Chanel purse costs $6,500, and your income is $5,000.
Oh, you can't do that. You can't do that, Oh,
They're
my
still
God.
selling, Enrico.
Well, that's right. Okay, number 5, having a savings plan. We were talking about, a retirement plan a while ago. A savings plan is another one. Probably the best thing that you do is to pay yourself first.
Yes.
Because paying yourself first in fact, it's easy to say again, but it's very hard to do. Can you imagine if you earn $5,000 a month and then you're paying yourself first? Say you pay $2,000 a month.
Why not?
Why not, right?
not?
But then people think, oh, I don't have any money to pay for the bills. That's the reason why.
Well, okay, so my ideas to them, I would ask them the question: you work all your life to pay bills.
Yeah.
We pay utility bill, with car payments, mortgage. Why don't you pay yourself first? Because you work, because you're the one making the money. So the first thing we learn in financial planning is pay yourself first.
Yeah.
And pay other bills.
And then the reason behind it that you have to pay yourself first, really, because if you wait until you met all your financial obligations before seeing what's left over for
No such
savings,
thing, yeah.
chances are
You won't have any.
You will not have anything.
Right,
There's no
exactly.
healthy savings,
Right.
or there's no savings account or investment account, nothing.
right.
Because it's a good idea, but no.
It's about discipline. If you set the account aside and you know that you got to contribute every month, it's a discipline, right?
Yeah.
And if you look at that as paying yourself by paying into your retirement account or your savings, it's a discipline.
It's hard.
It's
really hard.
But if you create the account and you do an automatic payment, you won't see it. You don't have to
Exactly.
actually take the cash and go put it in there. You do the auto pay, so you don't see the money, but it doesn't matter how much you save aside. You still can work with the leftover. But amazingly,
exactly. Yeah.
Right?
In fact, it's all a mindset there.
Yes,
Discipline, mindset. So the question here: how much am I going to be putting in my saving plan if I pay myself first? Well, probably 5% or 10% of your income. And I
Not
also
a bad amount.
Well, I sometimes I tell people too, Milan. Say for example, you have, it's. I like the way you said it, because something that you don't see,
Right.
Just
Yeah.
like an automatic payment,
That's right.
you will not touch it.
Right, exactly.
So the other thing that I said, I tell my clients is, if you have a car payment and you paid off your car already,
Yeah.
now for example, $500 a
There
month,
you go. You got 500 extra.
just keep on paying 500
pay
extra.
yourself. Pay yourself.
Exactly, as if you're treating like you're still paying the car, because in the first place, you're living off without that $500
That's
anyway.
right. But if you don't stash that extra $500 away paying yourself, that 500 tends to go sideways somewhere, and you don't know where it
You
goes.
just don't know,
You just don't know where it goes. yeah.
Exactly.
Because you just see that extra money in your account. You just tend to spend more
Exactly.
somewhere else.
And that's actually a good resolution there. You have a secret account.
Yeah. Secret.
Secret account, I call it, and then
I
have
don't
that
know.
automatically deducted.
I don't know
like
if the
that.
spouse like to hear your secret account. Enrico.
They don't like that?
No.
Mga lalaki, don't do that.
Your money is my money. My money is my money.
Oh,
Have you heard
there
about
you go.
that? You're married. So don't say secret account. Spouses won't like that.
No, they don't like it, right? So, well, it just means that you want to have a separate account
That's
for
right.
that savings,
Yes. Mm-hmm.
right? Very good. I like that, Milan. It's again, it's easier said than done, because
That's
it's
right.
all a mindset. You have to have that mindset, and you have that intention to do it, and tons of discipline.
Yes.
I like that. Invest. That's another tip for us. Okay.
Oh, I love invest.
So investment. So if you're contributing to a retirement plan and a savings account, you can also still manage, some investment. So what can you say about this one? Investment.
All my life, I'm not a stock player. Those I did participate in some stocks. If you're not an experienced trader, do not invest in stocks, because that could hurt you and could send you to bankruptcy. But the investment that I see that is really like the best, nothing beats real estate. Why?
Really?
Because it's so realistic. First of all, you buy a home to put a roof over your family's head. That isn't a big investment itself. Besides investing, having a roof over your families, you earning equity on your house. Who gives you $200,000-300,000 in 5 years' time? A lot of family cannot save that much in 5 years' time.
Exactly.
But your house will earn you that much in equity.
Yeah.
Believe it or not, amazingly.
Oh, yeah.
And if you have extra cushion, extra money that you save aside, invest yourself in another property, another investment. Rent it out. Do Airbnb, I don't know, but have rental. So what you want is at the end of retirement, you have called residual income.
That's right.
Like a residual income that will pay you so that you have a better life, living styles, versus just depending on Social Security check, which we all know that is
There's not money.
There's not, and hopefully
You cannot depend on it.
You can't. That's right, and and little as we get it, it's not enough. Let alone we don't know in our time when we retire, our kids retire, they're going to have any Social Security left. So
Exactly.
So I think that real estate is the best way. You really, they say, oh, what about real estate? You take a loss too. Well, we go through recession, right? We all do, and when we do, we don't sell our house. We don't sell the house over our head. So why would you think it's a loss? You sell when there's a capital gain.
Exactly.
You don't sell at a loss.
Exactly.
Right? Yeah.
I like two things that you said there. Real income and passive income
That's right.
are the two most powerful income that one can ever have.
That's
you know?
right,
And
yes.
if you can position yourself that way, I think you're in a very good direction. Real income and passive income. And of course, real estate is one of the best investment platform ever.
That's right.
I think I would agree on you with that, Milan. Very good. So investing, although there are other things that you can invest your money on as well, as long as it's investment. There are other financial products there that can be still
That's right,
okay.
that's right.
A fixed index annuity is okay. You just
Right.
have to talk to your financial professional.
Yeah, and you have
just
to
figure it
educate
out.
yourself too, because if you don't know what to invest, we talk about, the safest is the S&P 500 versus, but you have to educate. A lot of people are not educated in
Exactly.
those kind of investment. It's confusing, and you have to follow the stock market, and to know who's doing better, and you have to admit, a middle class family do not have that kind of education in investment.
Yeah.
So, talk to your financial planner. Make sure you stay on top of it if you're going to invest in that direction. But I think for me, the safest way for me to, not necessarily safest way for you, but it's real estate. And I've always loved real estate, so.
And I would agree on that. Invest in real estate. There you go. Mga kaibigan, I just remembered some of my friends really when they watch Grant Cardone talk about real estate, it's a way to go on an investment. And I think I would agree on you on that one as well. Well, guys, mga kaibigan, you start talking to people, realtors or, your friends who are real estate investors, you'll get some tips from them about investing in real estate. I would do that if I were you. Okay, so number 7, let's talk about maximize your employment benefits. So employment benefits, we were talking about 401k a while ago, some flexible spending accounts, the FSAs, or some your medical and your dental insurance, etc. These are worth big money.
Yes.
When you're actually not employed. That's actually true because especially administration fees on these products, make sure that you're maximizing your all of these products and take advantage of the ones that you can save money on.
That's right, especially the 401k. When your employer matches up to 3% or up to 6%, I think normally it's 3%. Why not? You're putting in $3 and your employer gives you another $3. That's $6.
100%. That's 100% return.
That's 100% return. And you earn interest on top of that. And that is a good cushion. And if you have that program available at work, by all means, please take it.
Yeah.
That's the best thing to do for your investment.
And of course, the other benefits as well, the medical benefits, the dental, the vision.
Right. Yes.
This can, of course, reduce the taxes and reduce the out-of-pocket.
That's right. Yes, because you're actually paying your premiums off of your gross tax, gross income instead of net. Yeah,
so that's a good thing as well.
That's a good thing too. That's right.
That's the
it
reason
reduces
why
your tax liability.
Yeah, that's the reason why we need to maximize the employee benefits, right?
Yes, that's right.
I love this one. So with regard to Medicare, of course, this most people, your clients are 65 over. Right?
65 is when you're 65 and older, you are required to have Medicare.
For Medicare, right?
Yes. Uh-huh.
So, what do you call this? Annual enrollment period is coming. Can you talk us a little bit about Medicare?
The annual enrollment is when you can switch plans from the original Medicare to add an additional Medicare Advantage. Switching plans, upgrading your plans, or if you move out of area, if you move from another state, you can always enroll in at any time instead of waiting for the open enrollment. But this open enrollment starts October 15th. So
October 15th.
That's right.
Okay.
So we're all
until when?
Ready until December 7.
Wow.
And then we have other enrollments as well. So, and different circumstances, different. So if you have any questions on when you qualify to make a change, do not hesitate to call one of us broker agent, and we'll be more than happy to answer your question.
Awesome. We will put your number out there.
Please do.
That's okay.
Love to talk to you. Yes.
I actually love, all these informations are free anyway.
Yes, that's right. Yeah. And you'd be surprised, and a lot of people don't know. They don't have the resources. Sometimes, I didn't know that.
That's
and
right.
You think that a lot of people know? They don't. Some people don't know that either. Not until they listen to your talk show. They say, I didn't know that. Oh, that's great to know.
Yeah. Well, how I always tell people, just like watching movies, the second time that you watch it, you got to say, I didn't catch that the last time.
Yeah. And and it doesn't matter what. You read a book. I love reading books. It opens your mind up, and you'd be surprised what you can learn.
Exactly.
From just that book.
Well,
something will hit you.
I love reading as well.
Yes,
every day I read. I believe in being a perpetual learner.
I know, because you just grabbed one of my book at the
Chamber
of Commerce event. Yeah, what's the book called? The Why of Money by Eric Mitchell.
Yeah,
yes,
that's why I was telling you. Eric Mitchell.
Money.
I said, he looks very familiar.
Yeah.
So I actually like that book. That's the first thing I asked you to give me.
Yeah.
All right, now, so Milan, let's go ahead. Let's look at this one. We're almost done, guys. We're just talking. We're just having a good conversation here. Just to give you some financial tips out there. So they say that the number 8 here is review your insurance coverages.
Yes.
Yes. Too many people are talked into paying too much for life insurance, for disability insurance. So a lot of people are because agents, they just probably not, maybe all, but if you really would want to help people, you would want to give them the right product for them.
Well, yes, and auto insurance is very important to have, and I think the problem here is that the agent does not educate the buyer much into insurance policy, because when as a customer, they only look at the premium. I want the cheapest premium for my car, but they don't know that you get what you pay for.
Okay, exactly.
If your premium is lower than the guy next door, it's because of what? Because you have a lower coverage. While the guys next door have a 100, 300,000 per liability, and yours is only 50,100. Well, that's a big difference in coverage. So your premium is going to be a little lesser. So before you go with any policy, check your liability limits, and that's what counts, not the premium itself. Because why? Because when you get into an accident, that's when they will find out that you're undercover.
Exactly.
Right?
I remember I was talking to my friend. Oh, Enrico, this company is the best company in the world.
The price is cheap.
Yeah, the price is like this, And then I've been with them for 20 years.
Right.
And then I asked them, so how many times have you claimed already? Nothing yet. That's why they're the best.
Yeah. Another thing too, when you're with an agent for 20 years, it's good, but doesn't mean that, because if you have your policy 20 years ago, it's outdated.
Yeah, exactly.
Today's liability is different, so make sure you have your agent review your policy annually to see where you're at with deductible. Can you afford the 500? If you cannot afford the 500 deductible, reduce that to 250.
Exactly.
If you have a lot of money saved up and you don't want the 250 and deductible, and you want to go to 500 and pay less in premium, go with that. But make sure the limits of liability is sufficient to cover any accident you have.
At least, right?
At least,
to the
yes.
minimum or the essential. And also, I'm telling people as well, when they have their all of these insurances, you have to review it every year. You have to go through annual review, whether it's a life insurance, a disability insurance, and auto insurance, even on commercial insurances like general liability, workers' comp, EPLIs, all of this. Please review it every year. Sometimes we're lazy. Sorry for the word.
Yeah.
Just to my friend's gonna take care of me. No, if you just keep on renewing it without knowing the benefits and the premium, there are things there that can be cheaper now,
right?
Because you just went through the process, etc.
I think the problem with the auto policy is that the customers only look at the premium,
Exactly.
but and also they only know in their mindset, they only know liability. I want liability only on my car because I don't owe any money on the car. Well, the difference between liability and full coverage is liability, you're only covering other people's lives. And liability, you're not covering yourself. The full coverage is you covering yourself as well. What if you get hit by a guy that does not that's uninsured?
Oh, I know people like that.
So
yeah.
the full coverage will cover your life, will cover you to be in the hospital, to be out of work and not making any money. So that's the difference between liability and full coverage.
Exactly. On the other hand, here, it's important that you have enough insurance to protect yourself,
yes,
your
it's
family, your income.
Yes.
That's insurance too,
Yes.
in case of death or disability. Because I always tell my clients, I'll picture this. What if you get disabled?
They don't think about that.
So
A lot of people don't think about that. Just like salon owners, right? They know they don't. A lot of them don't know that they can buy business insurance where they cover loss of income. What if your hand gets hurt and you can't drill?
There
and
you
you
go.
fall down and you cannot work. Well, the business loss, income loss will cover for the days that you cannot work.
Exactly.
And that's an excellent coverage, and it's well worth the premium. Don't you think?
Yeah, I would definitely agree. And this is what I tell people: you don't buy life insurance when you're dead. You don't buy health insurance when you're not, when you're sick. Exactly. So you don't buy anything insurance when you're already there.
Already there. That's right. You buy because you want to prevent in case it happens.
For the just
to you.
in cases.
That's right.
I love it,
right.
Milan. Thank you so much for that.
You're welcome.
So another thing that I always would like to talk to people about is not just growing money. I always, it became a passion of mine to protect it as well. So what do you mean by that? Well, insurance is to protect you, but for assets. Number 9 here is update your will.
That's
You know?
right.
So you have to know that you need to update this
That's
wills.
another subject that is hard to educate people too. Is that
Exactly.
they think that, no, I don't need a will. Well, they don't think of a will because they don't think of death and dying. Just
No.
like we don't think of buying life insurance, we don't think we're going to die pretty soon, right? But
We don't know that.
you never know that
You never know
nowadays,
that.
right?
Yeah,
You know,
especially
people have
nowadays.
strokes at age 30 and 40s, right? So what's 50 and 60s? But yeah, you're right. You know, on a will and trust go together, and people know about will, but a lot of people don't know about trust either.
Exactly.
So that's a different
Two different things.
education that need to be educated on. And plus, people don't want to know about that because in order to be educated on this field, you have to pay an attorney.
Exactly.
And they cost so much money.
Exactly. So
Right?
that's the
So-
reason why you have to do your research.
That's right.
Talk
You can
to the
go
right
onli-
person.
Right. And you can go online and ask the question in Google. Get okay, why do I need a will? What if I don't have a will? Is a will enough? For it to go probate?
Yeah.
Do I need a trust? So if you Google those and then you find out what your needs are, then maybe you might invest in an hour with an attorney to see how much it would cost to set up a will and a trust.
Exactly. And can you imagine, Milan, here in the U.S., only 33% of Americans has a will.
Yeah,
You
I
know,
believe
so,
it.
And if you have dependents, no matter how little or or how much you own, you need a will.
Well, this is what I hear, right? When we talk about will. Oh, I'm not rich to have a will.
No, that's a
But
misconception.
that's right. That is a wrong statement, and that's wrong thinking. Because a will is not. You don't have to be rich. What if, when you're alive, you're not rich, but maybe when you're dead, you're rich?
Yeah.
What if you're on a plane and then the plane crashed and they pay you $1 million?
Yeah.
Well, you're dead, right? So where does that $1 million go?
Yeah,
Have
exactly.
you thought about that?
That's
So
right.
I put that scenario out. They think, oh, you're right.
Yeah.
What if, right?
Correct. Well, the simple difference between a will and a trust. A will is it will only take effect when you die.
Yep.
But a trust, it takes effect today once it's funded or
Yes,
recorded.
you can make. Yeah, that's right. That's right.
So and then of course you would want to know the probate law
That's
in
right.
your state. You have to know that, so you'd know how important it is.
And did you know that if you put your assets into a trust, that collectors cannot garnish your trust?
There you go. So you have
It's
to
a
talk to your
safety.
trust lawyers, guys.
It's a safety. It's a safe issue to hide your assets, right? They cannot go in there and get your money, get your assets.
Perfect. So we have to again trust lawyers. That's the best
right.
bet. I
That's
like
right.
the way you said it, Milan. Invest on a lawyer for an hour.
Yep.
So you'd know the difference
That's
of all
right.
of these things. And I love it. Thank you. And we're actually towards the last portion. Keep good records. Keep good records.
Oh, boy, that's a hard thing.
If you're not careful about keeping thorough records, you're probably not claiming all allowable income tax deductions and credits. You have to set up a system on, today. So because you're going to be saving a lot of money just by doing that.
And I have an idea on that. Take a photo of your receipt.
Yeah.
And keep it in a folder, in your computer. Buy you some external drive and save everything in that. But you don't have to have the actual receipt if you take a copy of it.
Exactly.
Right, yeah.
And then the other thing that I tell people, keeping good records and accessible too.
Yeah.
You have to have that accessible
You have to be
as well.
organized and label your folders. Yeah.
Exactly. And then you put it where some people, your family members can find it easily
Yes,
for
that's
just
right.
in cases, again,
Yes.
when something happens to you, because sometimes people, they
Talk
only...
about that. Talk
Yeah.
about that.
A
lot of people don't know that. They don't think about it. So when you passed away, well, your children or your spouse might not know where you put your money.
Yeah.
Where's your safe deposit box? What is your code to your ATM pin? Who do you bank with? Where do you hide your money? So it's good to list out all your information so that if you pass on, then there's information somewhere that your family can search.
Exactly.
I
Make
know.
it easy for them.
That's right. That's right.
But
And
not easy for...
you'd be surprised. A lot of people, family, just frantically search for information.
Exactly.
Yeah.
Wow. I thought we were just starting.
Yeah, I know. We can go on and on for days and hours on this subject, right?
Exactly.
We need to talk about, yes.
Exactly.
But I think we've covered pretty well on all subjects. Thank you, Rico. You really open up all these matters. Things
that's
that
why
matters.
that's the reason why I love
Your
talking
toolbox
about...
is so big, Rico.
Now, Milan, just before we end, tell people where they can get in touch with you.
Well, my phone number is 702-902-6899. If you cannot find my number, you know where Enrico is at. Call him. He'll pass on my number. Thank you, Enrico, for having me today. Thank you. I appreciate it. It's
Perfect.
really been my
I
pleasure.
appreciate that. It's our pleasure really to have you here in our show, Milan. So mga kaibigan, if you're doing at least 6 out of the 10 that we mentioned, consider resolving to make more improvements along, over time. I know it's not going to be an overnight thing, but at least, choose one area at a time and set a goal for incorporating everything in those 10 tips that we actually gave you. All right. So again, in behalf of PHLV in My Toolbox, thank you once again, Milan, for being here today.
Thank you.
Until our
My
next
pleasure.
episode, mga kaibigan, thank you so much. See you next time.
Bye-bye.